Good day, investors. My name is Lawrence, and thank you so much for watching this channel. A channel talks about investing in stock market and also how you can be financially independent. If you're new to this channel, please consider subscribing so that you don't miss out on other new uploads. And also don't forget to share it and also like our content so that it can be shared. It can also be recommended to other like-minded people. If you're a returning subscriber, once again, welcome back to my channel. Today I'm going to be talking about something that I actually talked about like 3 months back, but still I get more questions. It looks like they did not watch my previous video, but today I'm going also to be going into deep discussing this topic, and also is money market funds, comparing it with share or stocks. So in brief, what is a money market fund? So a money market fund, in briefly, it means an investment company or a fund manager that collects money from different investors, and it invests on behalf of those investors, and mainly it has specific investments options that they do put the money, and mainly it will be in short term investments like bonds, like treasury bills, like high interest fixed deposits, and other short-term investments, because actually most of the money market funds are strictly licensed by Capital Markets Authority. Mainly I'm talking of the East Africa, Uganda, Kenya. So if you're going to invest in a money market fund, always check if they are licensed by Capital Markets Authority. So basically that's what I can talk about a money market fund. So what about a share? A share, basically it says it is a piece or a unit of a company, so of ownership. For example, we are talking of the Safaricom, the most popular. If, for example, is listed on NairobiSecuritiesExchange, so if you buy a share and the minimum is always 100 shares, it means you become part owner of Safaricom. So let's take an example also of like Uganda. The most popular stock at the moment is MTN Uganda. So if you buy 100 shares of MTN, it means you're owner by that percentage of 100 shares. So basically that's what it means by shares. So why am I comparing, and why am I interested in doing this video after even 3 months? Because I have realized that actually most of the people who watch my videos, they are most of the beginners and intermediate. So I need to emphasize on this topic before I go into like detailed stock market things, because if you're new, I normally recommend money market funds as you learn about stock market. So that's why most of the time I always emphasize on this topic, because it's extremely very important if you're starting to start slow, and also, but of course as you invest the money where it is very safe, and you look for the an option where you can get more, you can say more percentage, as we are going to share in the video. So let's go directly to the comparisons. Each comparison I'll be discussing the reason for that comparison. So let's go directly to the comparisons of money market funds versus shares or stocks. So basically a stock is like the whole company and its shareholdings. So that's the difference between a share. A share is the unit of ownership of a company, but a stock is the whole company and its shareholdings. For example, the whole shareholding of the 100% ownership. Basically that's what a stock is. So let's go to low. So number one, it says low risk. So Why is it low risk? In my recent memory, I've never heard of any market fund that lost investors' money. So you can be assured 99% of the time, if we invest in money market fund, just to be specific, a licensed money market fund, you're assured that you will not be losing money. So another thing you should be looking for is high risk. So if you're going to buy shares, I'm not saying that it's high risk, but I'm comparing money market fund to shares. So if you're comparing the two, of course shares are more risky compared to money market fund. So that is one aspect where, if you're newbie, if you're intermediate, the reason why you should be putting your money in money market funds compared to putting your money in shares, especially if you're new to investing. So let's go to a second aspect that you should be looking for if you're comparing the two. It's low return. Definitely 100% money market fund returns are low compared to shares. So most of the money market fund will return between 10 to extreme of 13%. So that's the main. Actually, some of them they will return up to low of even 8. So always look for companies that will be giving you up to 10, between 10 to 12 is a very good return, and stocks is high return. Actually, stocks, though they are high risk as we discussed, but they don't have any limit of returns. For example, if you've been following, for example, Nairobi Securities Exchange, most of the companies that have returned up to 300 percent. For example, if I remember, I know Kenya Power, it returned up to 300%, even up to now it's still returning. If you go to KCB, it have returned 100%. If you go to actually most of the banks, Abisa, it returned up to 80%. So in 1 year, a stock can even give you up to 1,000 return, which is not like money market fund, because money market fund, as I said, it normally invest in low risk options which do not return more interest. So that's what. So if you're good at investing, if you understand shares like me, definitely I highly recommend stocks compared to money market fund. So let's go to another aspect which you should be considering. It's called flexibility or liquidity. Definitely, money market fund are extremely very flexible and liquid compared to shares. For example, me, of course, I also have a money market fund that I put my money if I need it, and I fill the form today. Tomorrow, I will get my money. Definitely, even the stock, you can get it actually in 2 days. But the issue with shares is sometimes you may want to sell the shares and you find that the stocks have gone low, or the share price have gone down, which means you're going to lose your money even if you want the money. But for this one, when you put your money in money fund and you want it, there is no risk, or they are going to chop your money. No, what you will not get is an interest, but you will get your principal in full 100%. So the reason why I'm saying the stock market is not flexible or not liquid, for example, you may want to sell your shares and you find that the shares are they have declined or they have gone down in shares, which means if you're going to sell it, you will be in a loss. So definitely, if you need money in very quickly and you need the money flexible, and like you need to use it in very near future, definitely I would recommend money market fund. For me, when I don't see anything in a share that I want to buy, I put my money in money market fund so that it can be giving me that 10%. So when I get something to buy in shares, I always liquidate my money in money market funds and I go to buy shares. So that's how you can also actually use both at the same time. So uh, another thing is, no, in money market fund you don't need any expertise. So the only expertise you need to know is is this company licensed or it's not licensed. So for example, let's maybe take an example. If you want to know like the licensed money market funds, for example, if you go to, you can say licensed. If you type on Google and say licensed licensed money market fund, money market money market fund in Kenya, money money market fund, money market funds in Kenya, for example. So you can see list of licensees. So you can see all the list. African Alliance Trust, they have a lot of them. Britam, Unit Trust, NCBA. So you can see they have, always check and go for money market fund. They always have a lot of them. So always to ask them to go for money market funds, because some of them they are risky. So always go for money market fund. Basically, you can see Dan Brea, Mana. So there are a lot of them in Kenya. So you can always check money market fund, Jengis. So there are a lot of them in Kenya, money market fund. So you can check all of them. So always go to Capital Markets Authority of Kenya. They will give you all the licensed money market funds. So if you, for example, you go to Uganda, like licensed money market funds, licensed money market funds in Uganda. In Uganda, there are not so many actually. Okay, invest with UAP. This one is not giving us all the licensed licensed fund managers. So if you go to fund managers here, you will be able to get the licensed ones. In Uganda, actually, there are not so many. Actually, most of the fund managers in Uganda, they are also in Kenya, like Britam, like UAP. So you see how there are very few of them, only 5 actually. There are some of them which are not there, because I know like the Zeno, but if Britam Asset Managers, Gen Africa Asset Managers, IC Lion, Sanlam, all the mutuals, all these ones actually they are also in Kenya, all of them. So you can see the difference between Uganda and Kenya. It is a big difference. So I was showing you how you can check so if you checked them, you can write to them, and that's what you need to know. They will show you their percentage, how much they will be earning, and you're there to go. But for the shares, there is some work you need to do. You need to know their earnings, you need to know if they pay dividends, you need to do some ratios. Though, of course, you may go to the stock market and buy without doing research, which is very risky, which I don't recommend. You may be able to get money, but the problem is if you don't have an expertise in stocks, and the stocks, for example, goes down, you'll be panicked because you don't know what is affecting it, what behind the fundamentals. So that's why I don't recommend, when you don't understand the stock, don't buy. So if you don't have any expertise, first go to buy money market funds and get comfortable. Then after getting comfortable, do a research, study about stocks. Then when you when you're confident about them, then you can get your money from money market funds and buy shares. So another last one, I believe I've seen most of the people who actually watch my videos are very young. So but maybe there are few people who are 50 and above, and they are planning to retire 100%. If you're planning to retire within like 5 years, I wouldn't recommend you to buy stocks, because stocks, as I said, they are risky. They can go down up to 50%, and if you need that money, definitely you're going to lose the money. So if you're planning to retire, definitely 100%, I would recommend money market funds, because as I said, they are not risky. They are consistent. You can get that 10% of yours as you go for retirement. But if you're young, I highly recommend start about shares, run about stocks, so that you can, as I said, stocks can really be rewarding if you do your own research. So there are other many like comparisons, but these are the basic or the main ones. So for me, what do I recommend? So on my personal opinion, I own both. Why? Because my emergency fund, if you invest in anything, always spare some money on the side, so that if you get any problem, any issue, always withdraw that money and use it. So money market fund, I can say, is my emergency fund. I always have my money in money market fund, and of course I do have a lot of money in shares and stocks. So for me, if, for example, like now on Nairobi Securities Exchange, almost stocks are very expensive, so now I'm not investing it. What I'm doing is, if I have money, I am putting it in money market fund. So if I get something that is good on stock market, whether Ugandan stock market, Nairobi Securities Exchange, if I get something that is better, that is encouraging, I'll pull my money from the money market fund and invest it in, definitely, in shares. So that's how you can use both complementary. If the stocks are very expensive, put your money in money market fund. If shares get cheaper, definitely you can withdraw your money from money market fund and buy shares. For me, that's how I use it. Basically, that is it. And definitely, if you have been with me throughout this video and you're not subscribed, you're doing injustice to me. Please consider subscribing. Don't forget to like, to also put, of course, you have to also hit that bell notification. Every time I release a video, you'll be able to be notified. Definitely, I cannot forget to remind you that investing in shares in stock market carries some risk. So if you're going to invest, please consult your advisor, or you are also like your broker. They can give you the best advice. As I said, I'm not an investment advisor or financial advisor, so please always take your own opinion, not any person's opinion. So that's basically about it. I want to wish you a happy day, a very nice day once again. Goodbye.